Pooja Sriram is US economist at Barclays. She's joining us now to take some questions. Pooja, great to have you with us here. Good morning. Thanks for your time. Prashant here. So how should we read the data out of the US? And what does it mean for markets, equities? Because equities sold off on Friday. But I'm not so sure whether the weakness continues or once we start to see a cut and 25 basis points, if you were to believe consensus is already locked in, we will get it. The question is whether it will be more or not. What will equities do post that, post the beginning of the cutting cycle, be 25 or 50? Go on, Pooja.
Hi, good morning, and thanks for having me on the show. So, let me start with your first question: is how to read the data that we got on Friday. And like you said, it didn't give us much clarity in terms of the size of rate cut that we should anticipate. But it was a mixed bag in terms of what it told us about U.S. labor markets. So I would say on the not so good side, we did see employment gains slow quite a bit. In fact, it did come with revisions to the prior months. So just to put some numbers into perspective, the 3-month moving average pace at which employment is growing is currently 116,000 per month, which is about half the pace of where it was growing 3 months prior. So that's a fair bit of slowdown that we did see. But on the positive side, there were some bright points in that report. The unemployment rate, a very closely watched indicator by markets as well as by the Fed, actually ticked down to 4.2% after having risen in July. And we did get pretty solid numbers in terms of average hourly earnings growth and the work week. So like I said, mixed bag. And the message that we took away from that report is it does point to a moderation in US labor market conditions, but very little indication that we're headed for an imminent deterioration. So, that brings me to the second part of your question is, we do think this paves the way for a 25 basis points rate cut in the September meeting. That's next week. That's basically consensus now. We also heard from 2 FOMC voters on Friday, and really their message suggests that they don't see any sign of panic when they look at the labor market data. It does indicate that they have very little appetite for a 50 basis points cut. So it does look like 25 basis points is the way forward. Now, in terms of markets, markets have been on a risk-off mode for much of last week. And, it's understandable given, the data have been a little hard to read. We are seeing signs of cooling in labor market conditions. And the question is, I think the question that markets are asking is the Fed behind the curve? Should they be moving, more quickly and more aggressively? We're not so sure that is, that should be the baseline, but markets, of course, are trading the risk that it could be the case. And finally, I'm no expert in terms of equity markets, but, our equity strategists tell us that historically, equities have, had a little difficulty around the first cut of a rate cutting cycle. So it's quite likely that they remain range bound until we get some clarity next week.
Pooja, hi. Thank you for joining in. This is Reema here. So while the data hasn't provided clear clarity, what is the Barclays call? Can we still hope for a soft landing after the weaker jobs data? I was reading a Citi note and they're saying that the jobs market is flashing a classic signal that precedes a recession.
Yeah, that's a great question. So look, our own call is, we think we're very much primed for a soft landing narrative. We've seen signs of cooling in the labor market, but it's been gradual, it's been disciplined. And we also look at other indicators in the economy. I would definitely point out the U.S. consumer spending aspect that's been holding very strong. In fact, it's been one of the key drivers of the U.S. economy. And income fundamentals, wealth fundamentals for U.S. households are still looking very supportive of consumer spending. And even in terms of some of the other data that we track, let's see, the PMIs, not much sign that that things are slowing very rapidly. So we're very much in the camp where we think that it's a moderation, but it's happening in a very consistent, gradual, disciplined manner, and that that a soft landing is looking quite achievable.
Right. So all of this brings us back home. What about India? What about India have you noticed in terms of data, and what could the implications of a US rate cut be on the Indian macros?
Yeah, so I think most people are expecting the Fed to initiate a rate cutting cycle starting in September, and that it should prove supportive for most markets in.
Okay, I think we lost the line there with Pooja. We'll try and connect back, but for now we don't have it. So what we'll do is we'll take a quick commercial break here. So Pooja, of course, I mean, the view is that is pretty consensus that it doesn't provide, the data does not provide clarity, a little bit of trouble for equities around the first rate cut, and 25 more likely as compared to 50 to begin the rate cutting cycle.